Hello, my name is Dr. George Mochocki, and welcome back from week 5 out of a 8-week course. Remember, this is a 16-week course condensed into 8 weeks online. You're way past the halfway mark. You figure week 5, I figure you're about like in the 10th week, so you only have a few more weeks left. Okay, here's what we have today. We're going to be talking about 4 chapters. And then remember, next week is week 6. We're going to be talking about on chapter 10, banking, and we're going to start working on our final paper. And we're going to be working it through the discussion board. We'll be talking about it. You'll be looking at the videos here. This is major paper requirement. Look at that. I might have it set up a recording for a team, but the only difference from a team versus individuals is 2,400 words, about like 8 pages. Average paper for an online class, average paper even in a high school for a final project. This will take everything that you have, putting it together. Okay, so what do we have? So you're going to go into week 5. It's going to be open. You're already looking at this video. Make sure you look at it. It gives you a quick overview. Okay. I'm going to try to keep it under 20 minutes. So here's what we have for week 5. We come in here, you have your Learn Smart homework. I'm not going to go through that. You have all your links. Some have already been completed all the Learn Smart. You have these last 4 chapters going to be your last hardest week. And then you're going to have one more chapter, and then all your Learn Smart homework is completed. That's 25% of your grades already done. 25, that's pretty good. Then you're going to have a discussion board. Okay. Now the discussion board. Let me go click on this first, and we're going to go in there. You also have something you haven't had before. Is a homework statement. You're going to be doing a Proforma. That's basically an income statement for your business. How do I bring in my revenue, sales, and look at my expenses? That means how much do I have to? How many customers do I have to maintain to keep my doors open and break even? How do I do that? If you're remember, if you're purchasing a existing business, you kind of have their historical data, give or take. Were they real accurate with it, or did they kind of fudge it? But you have some idea. As a new business, you're gonna have to come up with these numbers. That's what a chief financial officer does. That's what new business entrepreneurs do. That creativity. It's not that hard. I'll walk you through it. I have a full. If you look at the chapters and everything else, this will work out well. So let me go in first of all to show you what you need on. Let's go on this one here on your income statement. A little different than what you had. So you're going to click on here. Here's where you submit the homework. Remember, wherever you had this pencil and this, the homework gets submitted here. It gets submitted here as a Word document or an Excel file. So type it in because it's going to be part of your original, your major paper. You have to give me an income statement. Usually in my face-to-face classes, they'll be doing income statement, a cash flow, and a balance sheet. Since this is a condensed class, I just want you to be exposed to one accounting statement, and that's going to be the income statement. How much money do I make? So what I provided for you, here's a copy of what an income statement will look. It's in a, I'm mistaken. It's taking a little while to open up. Show all. Oh, here it is. It comes up here. It probably says open up another window. It's a PDF file, and you can find this in your book. And it kind of tells you. You can print it out, and you could type this in either in an Excel spreadsheet. Some of you have already had accounting. For those of you that didn't, I'm not trying to teach you how to use Excel, but in business, you should be able to be comfortable with Microsoft Word, Excel, PowerPoint, and Access as a database. So if you get to that opportunity at the College of Lake County or at the community college that you're going to, and just using this as a supplemental review, or you just found me on YouTube, uh, they do have, for lack of better words, a course called Microsoft Office 2010, and it'll go through all the different functionalities of that. Okay, so you just fill in. Da, 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 da. Now here's where people get a little nervous on the income statement. How many and how much, and here's the total. What you have to look at is how many is basically how many customers do you think will come into your shop on a daily basis. Take a gamble, 20, 40, 50, I don't care. You're making these numbers up. In your mind, you can see so many. Then the price. Now, you've had different items. We talked about product mixes and product lines. Product lines are product mixes, a whole bunch of different product lines. Forget all that for now. You're doing a pro bono. You're just making your best estimate. how much revenue is going to come into my store. I don't know what they're going to buy, but I think, so kind of think about it like how much will an average customer spend in your store. Don't worry about the different product lines that you have in your store or product mixes. Not right now. I mean, you could have two categories. You could have an online and offline. If I'm looking at here, online, offline, have the two categories. So far, so good. So that's going to give you your product mix. Your average customer. You put this in and give you your total. Now, this other thing, this cost of goods sold inventory. Some individuals, it's kind of a concept until you take accounting. What I'm trying to do is I have like a quick and dirty way of doing it, but then when you take accounting, so well, Dr. George told me to do it this way. Fine, so I'm trying to do it the same way. So when you're taking this class, you at least see the accounting statement. Accounting is not difficult. Most of the information here will be populated through a quick pro or a point of purchase. You got the electronic registers in a lot of stores. So it does that all for you into some kind of accounting software. I just use QuickBooks because most small and medium businesses, that's the program they use. And then as they get larger, they'll go into Peachtree or another proprietary accounting software that has more functionality, more areas to write off, a little more complex, but the business is getting complex, so it's a little harder to track the data, so it already takes you to the next level. But so now the beginning inventory. Here's how you have to look at it. When you first start off your business, your beginning inventory is basically what you have. You have zero. You have no beginning inventory. So you put zero there. Merchandise purchase, what do you do for the first month? So you put in your first month's amount, which would be, let's say 2,000. I don't really care. Just a number that you think. If you don't have any goods or services, I mean, you gotta have. If you're not selling anything other than services, that'll just fall into your expense. But because you're not selling anything. But you may have to have some paper, some other stuff as part of your operating for a business. Even if I am a massage therapist, I gotta have my oils as an inventory to get indirectly for every time I give them a massage or anything else. I'll put an oil so I could massage their back. And do you see what I'm talking about? So that'd be an inventory. It's something that is part of the service for me to do that. I could do it without, but I need it. If I'm going to do cutting hair, I got to already have some kind of inventory for shampoo. I sell some out to the public, but some I need for my own expenses. Okay? All right. So what you're looking at this, so you have your inventory, some sort of inventory. So you start off with zero, you add into it, and now you have cost of goods or inventory available for sale. Now at the end of the month, you're going to come back, how much did you use? Let's say you always got to have 2,000 because you figure you're going to have 10 customers a day and times 30 customers in a month. Times 30 days in a month, and that'll give me my monthly inventory. Then I multiply that times 12, and that'll give me my annual income. You're just working from the beginning and working up. You're making your best guess now, okay? Do you see what I mean? So now you put that in there, and then less inventory, and that's what you do. So when you go for the next month, your beginning inventory is going to be your ending inventory here, and it just keeps on checking. But you're always going to say, I always need $2,000 worth of inventory. But the cost for that, like if you're doing for your supply in your cabinet, for your food pantry that you have at home, you say, I'm always going to have $100 worth of food pantry stuff. Could be flour, sugar, junk food, whatever you want. Potato chip, that's your food pantry. You should check mine out. But but it's always $100 or whatever I put in there. So at the beginning of the inventory, I have zero. I put $100. I got cost of goods available. What I have, I got $100 worth of food pantry stuff. It's different. And you get a little more of that when you take the full accounting class. Now you're ending inventory at the end of the month. Oh, I'm off short of. I got a lot of food, a lot of healthy stuff. No junk food, so I got to buy all that. But then when I'm buying that, so I go back here. So my beginning inventory is my last inventory for month 2, and then I have to buy stuff to bring me back up to my $2,000, whatever product lines or expenses I need to satisfy my mission or my customer base that are buying my purchases, or it's part of the services I need when I provide a service for them. Okay, so now I have cost of goods available, and I start all over. But remember, what I paid for this month, like what I paid potato chips last month, they're on sale, so I got them for $1. This month I'm replenishing it. I only had the same amount of money, but my cost of goods is more because the potato chips aren't on sale. So now they cost me $1.99. So you see how my cost adjusts. And remember, you're not looking at this is what you're paying for it, not what you're charging the customer. Or, right? This is your cost. This is your expense. This is your inventory. And then you put the number here, and then your operating expenses. And I've got one on here. In the book had a good thing operating because your lights and all that other stuff. General expenses. Look in the book; it'll help you out. All right. So that's your. Do you see what I'm talking about? So this one is here. How many customers do you think in a day will walk into your shop? Remember, you're starting out. This one here. You gotta let me know if it's for statement of incomes. It's for a year. Here I would put it. 2017. What the heck was I doing? I hadn't copied it. All right, just to cross it out. So when you're doing years, it's 2017 year. But you start off for one day. So print a couple of these out. For one day, here's how many customers are going to come in. For this is the average cost they're going to do. I don't know what they're buying, and here's my total. Now I've got another product mix. I got an online, or I got a lunch crowd and a dinner crowd. I'm not saying what they're buying, just an average. And now that's how I come in my revenues or my sales coming in. And then I take the other sheet and I take this number here and multiply it, or you could do it on the side things if you want. Do your work in here. Multiply times 30 for the month you're doing, and that's going to give you a total for the month. Now to get the year, you multiply that monthly one times the 12 months, and then you'll have your yearly income. In business, when you're doing one of these forma business, you're anticipating what your income's coming in. You understand that every month is not going to be the same. I get a winter month. I'm selling Christmas trees, or I'm selling something that's hot chocolate. I'm just making that up, or ice cream, Dairy Queen ice cream. Their busy months are going to be in the summer. In the wintertime, they're still selling stuff, but they're not making as much on that. You see what I mean? Gotta get rid of this. Okay? They're not making as much because people aren't buying stuff in the wintertime. Pop-ups are driving me nuts here. Remember, I'm alive. Do you see what I'm talking about? So they're not buying stuff in the winter. So you're going to see on their monthly income, it's going to be different. Winter months, the sales is going to be lower. There may be some of the hot dogs or whatever, but people don't go to Dairy Queen to buy hot dogs. But then in the summer months, when the peak, when it's hot, and it depends on how hot it is. If it's just kind of a cool summer, well, I'm not that sweaty. I may have an ice cream, but not as much if it's really hot. Then it becomes like a treat. So do you see what I mean? So your months are going to be different, and then you add up all those months and different things. So when you're doing a real income statement flow for a year and you're submitting it to your investors, make sure you have it. The months are different depending on the business cycle, what is going on. So I have to say that, you submit that, and we're good, okay? So you do that. Here's how you print it out. Here's where you submit it. Remember, you submit it, and here's a quick overview how you do that. I don't want to spend, I'm already at 11 minutes, okay? So what else do we have? Weekly discussion. Okay, now let's go into your discussion board. All right, back in my weekly things, I have no discussions, right? I'm in week 5. You've got your learn parts. Now I'm going to go to my discussion board. In my discussion board, I'm trying to have you do several things before you go on. Remember, here's your income statement. Print it out. Now let me just get rid of this thing. Just delete. You don't really need this one in here. Okay, I got rid of it. I put it in here because it's going to confuse you. You have one item I want you to do. In your discussion board, you're going to come in here and you're going to do the CNN financial. And then later on, I got some videos for you to look at. But what I want you to do is you click on this tool. It's not mine. It's going to ask you Adobe. Okay, it's in here. We should have Adobe, how healthy you are. Okay, it works. Oh, here we go. Click. I'm using a different one. But anyway, allow. Okay, so what's going to happen when you come in here, it's going to ask you your age. Now, they're going to ask you, you got to at least be 25. So if you're under 25, pretend I'm 25. All right? So you're going to put in your age. I'm not looking about what you put in. I'm just looking at your score. So you're going to put in 25. And then tell me what your annual income is. Let's say I'm making $30,000. I'm just making these numbers up, okay? Okay, 30,000. And go. And it's going to ask you, how much is your house payment? This is similar. I want you to understand your own personal when a bank looks at your, or a supplier is looking to uh, uh, front you supplies or goods as a new business or even existing business, they kind of want to see your financial health. So they're going to look at how much you're paying for your rent and your mortgage. Right now, you're looking at your personal. To go into these chapters for this week, you're going to be talking about accounting. You're going to be this one here, personal finance. You're going to talk about accounting. You're going to talk a little bit about different securities, stocks and bonds. That's what the chapters are on. 18, 17 is accounting, 18 stocks and bonds, and 19 is chief financial officer. As an entrepreneur, as a small business manager, even a team leader, you are basically have to look at your budget. How are you going to make the money? Do I borrow? Do I bring in more clients? Do I bring in more customers? My sales are down. What do I do? How am I going to bring them up? Do I do more advertising? Do I lower my prices? Those are all things you have to do in business. But before you understand the functionalities of expenses and revenue and sales, one should understand. I use this starting off with your own finance. Tell me a little bit about, find out about yourself. So they're going to look at your house payment. They're going to look at how much you owe, how much you have in savings. In business, we call that retained earnings. Diversifications. Are you only have one product line? I'm opening up a chicken place. That's all I have, chicken. No hot dogs, no nothing. Look at Dairy Queen. Dairy Queen also sells like hot hamburgers or everything else. They're not bad. I mean, I'm already in there. But that's not their expertise. Their expertise is under ice cream. But what do they do in the off months? People still come in. I'll come in here. I'll have maybe an ice cream cone and a hamburger or something. But that's, so do you see what I mean? So, or if something happens with the ice cream or one of the markets, they have something to fall back on. Most businesses deal with residential customers, and they also deal with business to business. Business to business are more repeat customers, more money. They know what they're doing, well planned out. They're more very cost conscious. And a residential customer, he or she doesn't know. They might be charging a little bit more. They may be smaller jobs, maybe one-time deals. But you have two different markets. So if one is down, the other one's picking up, or vice versa. If they're both good, you're doing excellent, and you have money or streams of cash coming from different ways. Okay, so how do you diversify? Do you have any company stocks? Do you buy stock? A lot of small companies, they doing well, but they also have rental property because they own the building, or they buy different stocks or investments underneath the business name, so it's another stream of income. Do you have life insurance? On the life insurance on the owners. You have insurance, or what we call managing risk. You have insurance on the business. What kind of insurance you have if you get sued? You have unemployment insurance you have to pay, right? You have workers' compensation you have to pay. That's the law. So you have to pay certain things, retirement. Do you as a business owner have something to retire? Or does the business have retained earnings, money to put away to expand the business? So this is all on your own, and then you're going to put it in there, and it's going to ask you a number, it's going to give you a score. And then in the form, I want you to say, hey, I got a score, I got a 90. I don't really care about all that. I just want you to see, oh, geez, I never thought about that. That's how they're looking at you. Now the same kind of things that I just talked about, they're also going to be looking at small business. Who's their customers? How much revenue they're going to come in? How much expenses do they have? Are they creditworthy? Do they pay their bills on time? What other businesses do they have a good business model? Who's the are there other competitors that may take away some of their business? Is their business growing? Is there any kind of legal action against them? How much are they paying for their expenses, the rent? They're asking for more money. Will they be able to afford that? Do I see their growth going on? And a lot of times what happens in business, what you're going to find out, just like in here, they're looking at your checking account, they're looking at your savings account, and they're looking at your assets, for lack of better words. Okay, so, or your income statement coming in. So in business, I'm looking at my income statement, I'm looking at my balance sheet, what I owe, expenses, and I'm looking at my cash flow. Okay, so when you open up, you're going for a loan, make sure your checking account, always ask for your checking account, you don't see your cash flow. So if you only have like $10 at the end, you're living from payday to payday. At least for the last 6 months, keep at least a couple $100, $500 from you. Oh man, he does or she does have a nice cash flow. Then you look at your income statement, how much you owe, or your W-2 forms for this thing here, or in the business, you're looking at basically also your what you're paying in taxes and what you wrote off. All right, so that takes care of that. So you'll do that and you answer that. Okay, so now when we go back into our weekly assignment, I put it in here. You also have under week 5, and I'll move that now. You know what I mean? We're live here. Maybe it'd be easier, financial recording. You also have the CNN. You can look at ahead instead if you want to go in there, and I've got some videos. You know what I mean? So if I come in here, I've got different videos on bonds just to help you. You know what I mean? Motley Fool, securities, and these are good ones for you to look at. Look at them and see if you want to post something in the discussion board if you want. You know, now saying all that, your exam, last exam, you're doing up and down. I got most of my A's, 33 questions or whatever. You're doing well. Remember, next time you're going to have 50 questions or 2 points more. The final exam is 100 questions. So I'm just preparing you. More and more questions, more questions, less points. So when you take the final exam, you're not freaking out. I'm only used to 30. You still have the same time amount, only you're going to have more questions in a shorter period of time. But you'll be prepared. I got all kind of reviews and everything else. So this week is going to be last week 4 chapters. Next week 1 chapter, and we're going to be working on your paper. So you'll be doing pretty well. You know what I mean? So you'll have the time to do this. Some of you taking other classes, maybe another 8-week or 16-week. This will work well. You get it done, and you're finished with this course in a couple of weeks, and you'll get your A, B, or C grade, or your the 3 credits for this course. That's a transferable course. All right. So you're doing well. So we're in week 5. What else did I have in here? You've got that. Always remember, you've got this. You got your exercises here, just in case you want to go in there. You got my full lectures and all the chapters, hour-long lectures. Your publishers, also make sure you have your concept maps. Those are looking at here. I've got all the maps in here, my mind maps. So when you're reading the chapter, print them out so you have a general idea what is covered so you don't miss it. Man, he said we're going to have something about income statement. I must have missed it because there's so much information I'm reading. Try not to do everything in one night. Do a little at a time. Get into discussion board by Tuesday. Put your comments in there and start talking. I come in now and I do almost try to talk to everyone, but I want you to start discussing yourself. Next week, you're going to be helping each other out as you would be doing in a virtual network or at work, helping other people on your team. Hey, how do you do this? Because when you're working together. Part of this thing is collaborative learning, only in a virtual atmosphere. I'm past my 20 minutes, and I'll see you in the discussion board, and keep up the good work. Again, my name is Dr. George Mochocki. This is Business 121 online, offered by the College of Lake County. This is an 8-week course, a 16-week course condensed into 8 weeks. You only have a few more weeks, and you're done. Bye. Okay. 22 minutes, not too bad. Hey, I'm getting better on this. Stop.